right, welcome back, everybody. Excited to have another episode of hashtag BKOT series, bringing into light what's going on in the accounting industry, accounting profession these days, and a lot of evolution of business models is occurring. And to talk about this, we have Ron Baker, VeraSage Institute, with us. Ron, how you doing?
I'm great, Chris. How are you?
Very well, very well. Thanks for coming on today.
Oh, thanks for having me.
We want to dive into a lot on uh, value pricing, subscription pricing, hourly pricing, yearly, annual pricing, right? There's a lot of different options that are out there. I mean, and as the profession keeps moving fast towards utilizing technology, utilizing global resources, utilizing out of the box thinking, pricing, right? Pricing seems to kind of still be in that hourly mindset, but let's talk about it. So first off, give us a little background of yourself, and then talk about how this evolution has occurred in the profession.
Sure, I'll be brief with my bio. I started my life in a big eight accounting firm and worked there for 2.5 years, and then went out and started my own firm. And when you start your own firm, you're wearing all the hats, right? You're the marketer, the janitor, you're doing the customer service, all of that. You're also doing the pricing. And what I learned very, very rapidly when I was running my own firm with my partner is that the billable hour is a lousy, and I mean lousy, customer experience. And at the time, I was studying what we called back then, this is like 1988, 89, what we called then total quality service. Today, we would call it customer experience. But I was studying these TQS companies, Disney, Lexus, Nordstrom, American Express, FedEx, companies that have unbelievable, stellar reputations for customer service. And I said to my partner, I want to emulate that. And billable hour didn't fit in with that because you could never give the customer certainty in price. And customers value certainty. They don't like surprises, especially with bills. And I got tired of having the conversation. Why didn't you tell me it would cost so much? And the only thing I could say was, well, I spent the time because I was brought up in a big eight accounting firm, and that's what you sold. You sold your time. We inventoried it in 6 minute increments, for crying out loud. So, of course, that's what I thought I sold. But there's not a customer alive that buys our time. They buy our knowledge, they buy our wisdom, they buy access to us, they buy all sorts of things that have nothing to do with time. So we just started to do fixed pricing in 1989. There were no books on it. There was nobody on the circuit talking about it. Unlike today, where there are hundreds of pricing consultants, and I'm proud to say that we bred most of them. And there was nobody out there talking about it, but we did it. We made every mistake under the sun, but we stuck with it because the customers loved it. And after we got good at it, after pricing became a core competency, then it just upgraded the entire practice. We were able to shed low value customers. We were able to quadruple and sometimes even more our prices, and then able to shrink our customer base. If you're not selling time, then there's no reason to measure it. We got rid of our timesheets. The team loved that. They didn't have to track their life in 6 minute increments anymore. All we tracked is their on time arrival. Did they get the job done when we wanted? That's all we cared about. And are the customers happy? And all of this was a revolution. And I was so excited by the results. I started teaching, and then I wrote a book about it. That book sold 40,000 copies around the world. Uh, since then, I've written 7 more books of topics around business model innovation and pricing. And I guess that's how it took me to where I am today.
I love it. 1988, this and folks that are exploring it today, they're treating it like it's something that's, right out, fresh out of the box, brand new type of concept. And now it's been around for a while, but and it's hard to kind of shift over to that. And for you, fortunately, after the big eight, you were able to transition. And so for some, it's can be a little bit more slower, a little bit more difficult. Um, but at the same time, you want to be focused on your clients. So, have you felt that the relationship with your clients uh, got better, got worse, or just maintained or was just the same?
Oh, it strengthened the relationship like you wouldn't believe. There was nothing else we could have done to strengthen the relationship as much as removing the friction of them not knowing the price. Everything we buy as a consumer, everything, we know the price before we buy it. We violate that law with hourly billing at our peril. It's going to cause write downs, it's going to cause write offs, it's going to cause customer lack of trust. If you bill them, they complain, you write off. The relationship is taking a trust hit, and trust. Like they say, trust walks in, but it gallops away. You can lose it really fast, and it's really hard
Yeah.
to get back. And we didn't have those issues anymore. We didn't have write downs. We didn't even have accounts receivable. We had prepaid income in a lot of cases because we set up part of pricing, of course, is the payment terms. And a lot of people prepaid for the whole year. And that made enormous sense. It helped our cash flow and it just smoothed out everything. We didn't have to waste time billing. We didn't have to spend 2 days a month billing and looking at timesheet reports. And, you know, to run a firm based with timesheets is like timing your cookies with your smoke alarm. It's really inefficient. It's a lagging indicator. And by the time you see it on a timesheet, it is by definition no longer manageable. That's not good enough. We need to up our game as a profession and create a great customer experience like Amazon.
Yeah, no, I couldn't agree more with long story short, I just moved from New York to Florida. And when you move to Florida, South Florida, you need a car, right? Well, I still don't have a car, right? And the idea is that I've moved and I'm living on top of the Whole Foods and I'm able to get and take care of everything that I need, right? And
Right.
so I'm thinking different ways where I don't want to have a car, I don't want to drive. And so when you have the right mindset and you approach it methodically, I foresee making your relationships with your clients much stronger. But then what happens is you start losing clients too. But it's okay, right? I feel that the profession they are fearful of losing clients, and but
Yeah.
it's not necessary, right?
Right. You want the right customer at the right price, and not all customers are good fit. And we try and be all things to all people, and that's not even a pricing problem. That's a strategy issue and a positioning issue. You're trying to be McDonald's or you're trying to be Morton's, because you can't be both. If you do decide to get a car, you're not going to go to a dealer and see Rolls Royces next to Chevys. It would be confusing and it wouldn't be good positioning. I sometimes think that a lot of accountants, if they were veterinarians, would have a sign outside the office that said veterinarian and taxidermist. That way they could say, either way, you'll get your cat back. And we can't just please everybody. It's not possible.
Uh, I like that. Yeah, no, makes perfect sense. The Now we have subscription and value. They're the same thing, right? Can you talk about that?
Yeah, they're not the same thing. These are different business models. So let me give you a pretty provocative and I
Sure.
think evocative definition of a business model. The
Okay.
traditional definition is how your firm creates value and how you capture that value. Now, the capturing part is your pricing strategy, but the creation of value, that's your strategy and your positioning. Are you McDonald's? Are you, Morton's or something in between? And, but the definition I like, Chris, is a business model explains where revenue will be earned when services are given away for free. So join me in the thought experiment of a CPA firm that does not charge for tax, does not charge for audits, does not charge for consulting or CAS. What would they charge for? That's the question. And if you go down that road, that's going to lead to a lot of innovation and creativity and
Mhm.
differentiation in the marketplace. And my answer to that is what you would charge for would be transformations. You would start to guide your customer from where they are to where they want to be. And because we're CPAs, and accountants, we're in a privileged position to be able to do these transformations serially. We can, I mean, if you think of all the ways that we help our customers move to a new destination, a preferred future, We help them grow their business. We help them retire sooner. We help their kids get into college, at least financially. We help them plan their legacy for when they're gone. These are all personal transformations. They have nothing to do with the services. The services are a means to an end. The end is that transformation. And we can do it over and over and over, and we can do it from womb to tomb. And that's what the customers value. And yet our language, our marketing, our messaging don't say that. We get wrapped up in the scope of work and the number of transactions and how big is your firm and all, how many hours is it going to take? None of that matters. We should go where the highest point of value is, which is guiding our customers to new preferred destinations of their future.
I was speaking with a client the other day, and he, doing this for 20 in the profession for 25 years, and he was speaking to one of his clients about and the reason why the call was there, he needs bookkeeping help. He realized that he's no longer needs to do the bookkeeping. And I was like, spot on. And then I started talking about his client who also does his own company's bookkeeping. And I was just like, and he ended up advising him on how that he'll take it off his plate. There's no need for him to do that. And then made him realize that, wow, I'm actually consulting, I'm advising. And the conversation ended up being over 30 minutes just talking about his own transformation. And I was very impressed that after 25 years, and change is constant, it's only a matter of when, not if. So after 25 years, he's just having like this, and it just occurred because he decided to speak to his client, and he was so excited. Now he's trying to figure out different ways to free up his time.
Yeah.
And so back to what, like I said, like having that open mind and just and seeing the value in it. And I could tell that very excited to continue doing this. So that just triggered in my mind when you started speaking about that. I mean, this is essentially the future, right? And it should 1988. I mean, come on, should be happening now and today. So, what would you say a tip for somebody that's kind of nervous about, the transition, moving over, the clients, any concerns that they have? What's a tip that for a firm to get started?
Yeah. The first thing they have to figure out is their business model. What kind of
Yeah.
business model? How are they going to create value for their customers? What type of customers? The whole positioning. Are
Yeah.
you Morton's? Are you McDonald's? That's those types of questions. Their purpose too. Of course, I'm a big believer in starting with your purpose. Why do you exist as an entity or
Mhm.
as a firm? But once those questions are developed, then of course you can choose to move from, if you're in hourly billing, you can move to value pricing, or you can move to what I think is more of the future, which is the subscription model. Now, they're two definitely different business models. And the question we get all the time, Chris, is, well, can I use both? And my answer to that is no. But more concisely, why would you want to? It's confusing. It's kind of like,
It-
yes, you can do it. You can have two spouses, but you're probably not going to like the result. Stick
nice.
with one. I mean, part of
Right.
strategy is deciding what not to do, what services you're not going to offer, what customers you're not going to serve. That's what strategy is all about. It's more about what we don't do than what we do. I think firms are defined by what they don't do. Think of the medical profession. They're stars at this. What a GP can do, and what they don't do. You're not going to go to your GP for oncology services or for surgery. Now, they could quarterback the relationship and get
Mhm.
you to that specialist. We need to be as disciplined as doctors are in terms of
Hmm.
what it is we do and don't do. And therefore, the subscription model, I think, is the way to go, because what's happening is we finally have a business model that aligns why we entered the profession with with our economics. And why did we enter the profession? To help people. Well, you
Mhm.
can't help people if you have 2,000 customers. I got news for you. You're not doing them any good. You're skimming the surface of what you could be doing for them. They'd be willing and able to pay you a lot more if you did more for them, if the value was there. And the model I love is the concierge doctor or the direct primary care doctor. And these are just revolutionaries in the medical profession. These are doctors that They don't take insurance, so they don't have all that back office paperwork and medical billing and coding and all that. They got rid of it all. They don't take insurance. You subscribe directly to them. And as
Mhm.
general physicians, they tell you their covenant with you is whatever you need medically that we can do. There's the constraint. They don't do everything, right? Whatever you need that we can do, you're covered. And unlike a fee for service doctor, which is what most of the doctors are under, um, it, they only get paid when they do something to you. So that's why they have 2,400 patients on average. And that's why they see 50 or 60 a day. Whereas a concierge doc or a DPC doc might only have 100 to 600 patients.
Mm.
Therefore, their average appointment time is over an hour. They keep you out of the hospital, they keep you out of the ER. Their patients take less drugs because the mindset is no longer about you present with a problem, we fix it. The mindset is we keep you healthy. So we
Mhm.
want to see you even when you feel fine because our job is to keep you healthy. You're making an investment in your health. Well, doctors keep us physically healthy, and accountants keep us financially healthy. We've got the same, the parallels between the medical profession, what they do and what we do are uncanny. And I think there's a lot we can learn from them. So that's my model for the subscription. You tell the customer, hey, whatever you need that we do, you're covered. And you just pay us a monthly subscription. You can leave at any time, but they don't. If you keep a subscriber for 1 year, you have a 95% chance or greater of keeping them for life. And finally, we are no longer looking at the math of the moment. We're not trying to figure out profit per hour, profit per job, profit per customer. We're figuring out lifetime value. We're putting a value on lifetime value. And when a subscription firm goes to sell, it doesn't sell at 1 times gross revenue. It sells anywhere between 5 and 14 times gross revenue because buyers value recurring revenue more than they value, one off and what we call reoccurring revenue, which is kind of like a rash. You never know if it's coming back. But with a subscription business, you have a track record of customer acquisition, annual recurring revenue, and the churn rate, the number of customers you lose. And you're going to lose customers. You're going to lose customers in any business model.
Yeah.
But at least with subscription, it's on your dashboard. In fact, the churn rate is on your income statement. You see it every month. It's right there in front of you. So you have to manage it and you have to reduce it as best you can. So it's a revolutionary new model in the professional world. But like you said with the 1988 and 89 comment, the first concierge doctor who did this, he was the Seattle Sonics team doctor. His name is Howard Moran. He started MD Squared in 1996. Now imagine this: in 1996, he comes out and he says, "Each one of my doctors is going to be limited to 50 families. That's it, 50. Once they're filled, they stop taking on new patients,
Mhm.
and they're going to charge those married couples $24,000 a year."
Mhm.
Everybody told him he was crazy. Nobody's going to do this. And he's the largest concierge practice across the United States, MD squared.
Wow. Yeah, it's kind of a pioneer of this. I love it because when rather than that, pay per hour, pay per model, it's um the revenue you're recognizing. I feel like a lot of clients that I speak with are chasing after it, or like, oh, there's this client. I mean, it's just eliminate all the day-to-day stresses that are bogging down your time. And this subscription model just makes sense.
Yep.
Uh, and identifying, what how you're working, and start with your current clients, right? And then you're able to kind of fine tune it. And then from here on, any new client that you bring on, right? It's got to be in this domain. It's got to be on this type of calendar, and they're going to follow a specific way. And then it just allows you to manage your time and bring on the right people. And if you lose them, then they're just not for you. I think there's a big fear of that. I don't want to lose clients, but it shouldn't never approach it like that. What is best for you and your practice, whether you have to
Yep.
yourself or you have several staff or global team, just what is that? What is the best? And I feel that they're starting to understand that business owners, managing partners, directors, and just like, you know what? If we lose a client, so what? But I feel that years ago it was like they wanted to have like 0% attrition.
Right.
And then, so
Yeah, and that's
most
not
of
feasible. I mean,
yeah.
yeah, we feel bad because we don't fire customers; they fire us, right?
Mhm.
We don't fire them. But this goes back to strategy and positioning. You've got to have the right customers. I don't want you to chase customers. I want you to choose them. I want them
Mhm.
to be members, and
Yeah.
membership has
Also,
its privileges, and that's what you get with a concierge or a direct primary care physician. You're a member of their practice, and whatever you need that they can do, you're covered. So they're not on this fee for service scope of work. Every little thing they do, they have to nickel and dime you with a bill. Even value pricing to some extent is still built around a scope of services, and this
right.
changes it to an insurance mindset, a peace of mind, convenience. It's a frictionless relationship, and you're saving the customer time. I think the biggest thing in today's world, in the so-called attention economy, where our attention is very limited and our time is, very constrained, is we got to save the customer time. And
Mhm.
to the extent that we measure time in this profession, it should be the time we save the customer and the time they spend with us. And we don't spend enough time with our customers. Why? Because we have too many customers, just like the doctor who has 2,400 patients. And I think it's a cardinal sin to waste our customers' time. And so I'm so offended when I get a 400-page tax organizer from my CPA. Hey, I'm sorry, that's like going to the doctor's office every time and having to fill out those 50, page questionnaires. No, stop this. It's abuse. You know who I am. We meet throughout the year. You should
Mhm.
know everything that I'm going to put in that organizer. And by the way, if I could fill out that organizer, I wouldn't need a CPA to do my taxes. So let's knock it off and let's up our customer experience game.
Yeah.
And the subscription model forces you to do that. It demands an
Mhm.
uncommon offering. If you go to the market with a common offering, you're just like everybody else. Oh, we do tax, we do CAS, we charge by the hour, or even if you give a fixed price, it's still a common offering. The market's going to put a common price on that. But if you go to the market with an uncommon offering like the concierge doctors do, then you can command an uncommon price. And that's the
Mhm.
only way to do it. You gotta up the offering.
Yeah. Got to separate from the pack and just really
Yep.
differentiate yourself that this is what we're doing. We know what we're doing, and we're going to do an excellent job for you.
Yep. And
Some
we speak your
confidence.
language. We're
Yeah.
niched. So we deal with one type of buyer or one type
Yeah.
of customer, and it's well defined. And we put ourselves in a box because that's what strategy is all about. It's about constraining what you do and what you don't do.
Mhm. Yeah. Um, Good conversation. Very well spoken. It's it's exciting times to me. I see that over the last 6 years, like I said, there's just been fast progression, how everyone's thinking outside the box in every single aspect, and it's really fun. So this was awesome, being able to speak, especially on sensitive aspects. Gotta get the collect the money from your clients, but let's not even make that an issue. Just make it recurring, subscription based. I love it. Thank you
Yep.
so much today, Ron, for
No, thank
speaking
you.
about this. So any final comments before we wrap up today?
Yeah, I would encourage people to check out the subscription model. There's lots of resources out there. You can start by going to the souloфenterprise.com, which is the radio show I do. And if you go to our homepage, you'll see a categories tab. And if you pull down that tab, you'll see the subscription model. And that's all the shows we've done on subscription. We've interviewed the 4 best-selling authors. I've written a book on it called Time's Up. We've talked to concierge doctors and direct primary care physicians. We've talked to CPAs and lawyers who use this model. And there's a lot of information out there on the
Mhm.
subscription model. And I guess I'd say the other thing that I'm seeing, which I'm really heartened by, is when firms do pivot to subscription from wherever they are, whether it's value pricing or hourly billing. A lot of times, Chris, they'll start a new firm. They'll just spin out, it's a skunk works model that says, hey, this model is so different. It requires different KPIs, different measurements, different offering to the
Mhm.
public. Let's just put it in a new firm. And then the new firm will slowly cannibalize the old firm. You'll either move customers over from the old firm or they'll leave because they don't think it's a good fit, but that's okay. Eventually, the old firm withers away and the new firm is left standing. That's probably the most effective way to implement this.
Hmm. Hmm. Um, yeah, folks out there that are listening, and please, Ron obviously knows what he's talking about. It has a lot of good information, so check it out. We're going to post the link below here. And again, everybody for tuning in, thank you. Hopefully learn a lot today. And again, Ron, we'll talk soon. Thank you so much.
All right. Thank you, Chris.